What I find to be of particular interest is when Republicans are in office, the average return going back to 1929 has been 7.85%. When Democrats are in office, the average return has been 14.93%. And the reason is because a lot of promises are being made on the campaign trail by Republicans and Democrats, right? Republicans are perceived to be pro business, Democrats are perceived to be more supportive of a big government. When the candidate actually takes office, a lot of these policies are difficult to actually implement. So the market is typically a bit disappointed when a lot of the promises that the Republicans have made, they're not able to fully bring to fruition. So then the market tends to be tamped down a little bit. And they're quote unquote pleasantly surprised that a lot of the anti-business policies that, as the perception is, are more difficult to implement once Democrats take office. So the market tends to do better given that backdrop. But regardless, the markets have been up, whether Democrats are in office or whether Republicans are in office. The other thing to keep in mind, and this is looking at the S&P 500 going back to 1949, when there's a Democratic president and a Democratic Congress, the market tends to do less well than when there's a Democratic president and either a Republican Congress or Congress is split between, say, a Republican House and a Democratic Senate. So the market really likes those checks and balances to be in place. The market does better in that environment than when it's a Democratic president and a Democratic Congress. The same thing is true for when there's a Republican president and a Republican Congress.